How's it going, everyone? It's Sam. Today, we have to talk about the coming death cross for Bitcoin. And this is true for, I'm sure, a lot of other cryptocurrencies too. And it's going to catch a lot of people's attention. I've already been getting questions about it myself, where people are saying, hey, this is looking really bearish. Should we sell? Should we buy? What should we do? What should we think about this? So I want to talk to you about my opinion on it. And also talk about some of the news in the market that I couldn't cover in the first video today. Now, I did a video already covering a lot of the news, so if you haven't seen that video already, I will put it on the end screen. Definitely at least watch that video too, because there was a lot to cover. And I want to remind you about some of the risk reward in the market. Now, if you guys don't mind hitting the like button and the subscribe button, I really appreciate that. And I will say too, there's a link down there to MooMoo. In case you want to try a stock trading app, I'll talk a little bit more about it later, but I made some big bets yesterday in the stock market and they're paying off well today, but they will give you some free stocks if you use that link and start depositing on the platform. So I'll talk more about that, like I said, towards the end. But overall, it's been a pretty good day in the market. We have some cryptos up like 12, 13, 14%, which is awesome to see after all the pain. And the important thing to remember here is we have a variety of people that are watching the channel. People that were in crypto way before I was. People that are literally millionaires or have tens of millions of dollars from crypto over the last few years, to people that bought in at $68,000 and have ridden it all the way down and are really worried. And there is going to be a flashy headline here in a few days talking about the death cross. If you don't know what this is essentially when the 50-day moving average falls down below the 200-day moving average, signaling a bearish market. Now, what's important to remember with this, again, because so many people are asking about this is a lagging indicator, meaning we obviously know that this is probably going to happen here unless Bitcoin just takes off in price because of the fact that we've fallen down so much. You don't need anyone to tell you that we've fallen down 40%. You can tell it in your portfolio, and maybe your significant other can tell you that you've fallen down a lot too, just based on your mood. But we have seen a lot of bearish sentiment over the last couple of weeks, and we're about to hit this death cross. What's important to remember though, like I said, it's a lagging indicator. It doesn't tell you what's going to happen in the future. If it did, it would be much more useful. What we've seen in the past though, is when we have seen a death cross, several times we've seen a spike in the price. So here you can see death cross, spike in the price. And this is a couple days, and we went from about 7,500 all the way up to about 10,000. We also saw another low jump in the price right here, right? We saw a little bit of a dip, then a little bit of a spike, but then over here, another spike in price. So it doesn't necessarily mean that we're going bearish when we see these death crosses. It just is a lagging indicator saying that we have been bearish. Now, with that in mind, I think it's important to take a look at where we're going moving forward. We had Powell today talk a little bit about where we are now in the market, and I think that's why we're seeing a little bit of a trend up today. He said that we are trying to create a robust economy. So they're going to use these rate hikes, but the fact is they're not going to try to kill the market. And I think that's something that we all already kind of knew, but it is nice to hear again, just hear him hit on that again. Now, we do have other companies like Fidelity that is adding Bitcoin exposure to their traditional ETFs. They said that this was because they wanted to improve the risk-adjusted returns going forward. And I don't know who exactly this is because I can't find a source. This is from Bitcoin Magazine though, and they are I think they're a really good source of news. They say Fidelity wouldn't be surprised to see more countries and a central bank adopting Bitcoin this year. And they say even if countries do not believe in the adoption of Bitcoin, they will be forced to acquire some. Now, this might just be someone at Fidelity. I'm not exactly sure if this was in a report, but I think they make a valid point. A lot of countries are having to deal with cryptocurrencies and they don't want to, but they have to because it is a hedge. Just like it's a hedge for us, it's a hedge for them against this doing really well and fiat falling down. So the fact is they might have to get in on this over the coming years. And Fidelity knows that. That's why they're offering it to their clients, and they're trying to get in on it themselves. And I think what's important to remember, I tried to find a good chart of this risk versus reward investing, and it basically just says, hey, bonds, stocks, real estate, small business, this gives you different levels of risk and reward. That's not what I want. I want to talk about specifically if you are invested in one stock or one crypto or, a basket of them and the price goes down, you have less risk and you have better return. If the price goes up, you have less return potential and you have more risk. And our minds tell us the opposite. They say, hey, this has worked in the past, so it's going to continue working, right? There's always a reversion to the mean, whether it's like the mean 10% return or 15% return or whatever it is. There's always a revision. So when there's a lot of pain, chances are it's going to get better. When there's a lot of greed, chances are it's going to get worse. And it's hard to remember because we're wired that way. We're wired to continue doing what is working well, and in a lot of things that works, but not in equities or in investments. So I think that's something you have to pay attention to, right? We've gone up a lot over the last couple of years, but over the last couple months, it's been painful. And this is where that rubber band effect comes in, right? There's less risk now than there was a couple months ago. Now, if you bought at 60,000 and you thought, okay, this is going to be a $500,000 investment over the next 5 years, that's still a great return if that's actually the way that it works out. But you have to remember, hey, we're still looking at a better investment now because it is cheaper. Now, I have just recently bought into some stocks pretty heavily. I've also been doing some buying in crypto, but I found some stocks that I thought were just too good a value, which I know I don't talk about stocks that much on the channel anymore, but people ask me about them all the time, which is why I want to talk about MooMoo. So I started using MooMoo recently and I really like it. So I know that we're kind of going through a little bit of a bear market at the time of this recording, at least with some of the growth stocks, but you can use some of their technical indicators to determine when a position is oversold or stock is oversold. They have extended hours trading, which is really important to sell before or after the market closes because a lot of people still don't have access to this kind of thing. I know it sounds crazy, but a lot of people can't sell before the market opens or after it closes. Also, they do allow you to invest in stocks outside the US, such as Hong Kong stocks, and they give free level 2 market data. That being said, there are some welcome gifts. So when you sign up using the link down below, you do have a couple chances to win some cool prizes, but you get some free stocks too. So when you deposit any amount on their platform, you get 2 stocks worth up to $3,500 each. And if you deposit $2,000, you get 5 free stocks. So you can definitely check out the link down below to try out MooMoo. I think it's definitely one that you should try out to see if you like it because they have a lot of information in one spot and they give short selling data, level 2 data. So definitely check out the link underneath the video. So thank you guys so much for watching. I really appreciate it. I hope this was clear of my thoughts on the death cross and what's happening in the market and the future potential. I still think this is a great area to invest in, but of course, I'm never going to tell you what to do or how to do it. You always have to make your own decisions, and I still believe in diversification. I do not have all my money in crypto. I live a pretty modest life. I have my house paid off, and that gives me the ability to make riskier investments in small businesses and in crypto, and everyone's going to be different, right? If you're someone that is making, a couple $100 in extra income and you have a ton of debt, crypto might not be the best risk-adjusted return. It might be paying off that debt, or it might be starting a small business. But I think for a lot of people, this is an area where you can make a lot of money, especially if you can keep your head on straight. Thank you guys so much. I really do appreciate it. There's a link underneath the video to MooMoo, and I will see you in the next video. Bye.